So lots to get through, but I'd love to focus on the private market venture with major banks and sort of the spin-off of the platform for dealing with your private companies. That particular market, how big do you think that could actually get? Can you move some of those guys to your overall main market platform?
Well, first of all, thanks very much for having us. We are really excited about the earnings that we've been able to deliver for our shareholders for the quarter. And the Nasdaq private market announcement has been something that we've been working on for a while, and we're very excited to share with with everyone today. With regard to the partnership, so we've been operating the Nasdaq private market for about 7 or 8 years. However, as we've looked at the evolution of the private markets, companies are looking to really bring more, private companies in particular, are looking at staying private longer, but also being willing and interested in providing more liquidity opportunities for investors and for employees. And so as we've developed this partnership, we really thought about what is the ecosystem we want to create. We want to bring venture firms and early stage and middle stage private companies into the platform. We obviously at Nasdaq have a lot of relationships with later stage private companies. And then we also want to bring large scale institutional investors and draw them into a fair and high integrity marketplace for private company liquidity. And that's why we chose the partners that we have joining us in this venture. In terms of the long-term impact on Nasdaq, in terms of the public markets, of course, we're always happy when private companies choose to go public and then list on Nasdaq, and having relationships earlier in their life cycle, we do think makes us the venue of choice for that. But really, we also see a huge opportunity in the private company liquidity landscape as well. We would say anywhere from 500 million to 1.5 billion. It's hard to know exactly what the total market opportunity is, but it's very large.
Will that marketplace, though, look any different, or how will it feel any different based on the bank's involvement? Do you have a sense yet?
Well, I would say that we have been doing this on our own, but as we have been talking to the banks, they definitely see more institutional investors being interested in private company shares. They've seen the private companies themselves accepting the notion of liquidity as part of their lives as a private company in new ways. And so what we've been seeing over the last year is continuous market programs for companies that might be thinking of going public through a direct listing, auctions, block sales, all of which really the private companies now are getting more engaged in. Whereas before they were happening behind the scenes, now the private companies are saying, let's create a fair and high integrity way, an efficient way to allow that liquidity to occur.
So on that point, in terms of going public, you got SPACs, you got direct listings, obviously IPOs. I mean, the first half of the quarter was, the first half of the year was amazing in terms of all of that. What's your pipeline look like? What do you see? And where's the interest right now?
So the pipeline for companies looking to tap the public markets is as strong as it was 6 months ago, if not even stronger. So we continue to see just an enormous amount of demand for the public markets as companies are looking at the opportunity to continue to grow and expand their businesses and raise capital in the public market context. So I would say that we've raised $111 billion on Nasdaq, the companies that came to Nasdaq in the first half of this year. But even still, the number of companies on file to go public is as high as it has been in the last 6 months.
Are some of those companies not going to be Chinese companies after the recent crackdown over in China about foreign listings? How do you see that part evolving, and what's the hit to the business?
Over the last couple of years, we've actually seen very high number of companies from China coming and tapping the U.S. public markets. The new rules that the CSRC in China have established now make it so that they have to seek approval before they come to the U.S. market. So that is likely to have some impact on, at least in the short term, as they're developing those criteria and helping the Chinese companies understand what they're looking for before they come to the U.S. markets. But we continue to have very active dialogue with Chinese companies, expecting to be able to come to the U.S. markets in the second half of the year.
Oh, talking about coming to the market, let's talk more about the client base. Retail investor trading has been a huge shift within the last year in particular. A-Rod, for example, making a most recent investment in that. How do you get some of that volume?
Right, because right now, retail volume tends to gravitate towards what we call internalizers, which are large broker dealers that take in the order flow, execute it on on their behalf, and then they will offload the risk that they've taken on into the market. So there's an indirect effect of having higher retail activity in the markets in terms of what kind of order volume comes to Nasdaq. But we would love to have more of a direct relationship with retail brokers and having that retail order flow come directly to the Nasdaq. In Europe, where we own and operate many of the markets in the Nordics, most retail volume actually comes directly to the markets, which that means that those orders get to be part of the price discovery. They get to be much more transparent to other investors. And of course, they get a very, very strong execution rate and a good experience. So if we can bring more of that into the Nasdaq market itself, we think that would be beneficial to everyone. There are some market structure impediments to that. For instance, we can't quote in sub-pennies, whereas most retail orders, even if they're not putting the order in sub-pennies, they're getting executed in sub-pennies. So how do we allow for a tighter tick size regime to allow exchanges like ours to compete with dark pools and internalizers? But then I think that the SEC will be examining other elements of market structure also, to make sure we're maximizing competition, maximizing transparency, and maximizing access to the markets.